Hello, traders, and welcome to today's live event. Harry, how are you doing today?
I'm doing great. Back and forth we go.
Yes, it certainly seems that way. Today has been very volatile. We had a little bit of early volatility. The market pulled back, tested the low from yesterday, and then we chopped back and forth for about the next hour, nothing going. And then, blam, here comes this long red candle. And rumors that Trump is going to fire Powell have been driving the market this morning, and now he's not going to fire Powell. So
Hard to
just a
rule
lot
anything
of
out, but highly unlikely, he just said.
it, hard to rule anything out. Anything can happen.
Yeah, maybe he'll appoint Eric to be the new Fed chair. Who knows?
Well, whoever it is, I mean, the initial market reaction might be negative that, oh my gosh, he's overstepping his bounds. How dare he? But then they'll go, well, wait a minute, though. That could mean that there's a rate cut coming. So we like that.
It definitely is a balance, It's there's the short term, here's some free money, but there's always, I mean, I don't know what you think. There's always been that fine line there of if the whoever the US president is, let's say the next president is a Democratic president, and they disagree with the Fed, if they can just go in there and fire without cause to put someone in who wants then there really is no Fed. The president becomes the Fed. They just keep changing the Fed chairs until they get someone that will match the policy that they want. Um, the market's always respected, even though they've disagreed with Fed chairs in the past, always respected that idea that there should not be a politic involved. It should be uh, a separation of church and state there. This would kind of destroy that line. So they might like the free money, but I think in the long term, it's not a good thing.
Well, the market and politicians, for that matter, love 0% interest rates. That's always
But
easy
they hate
money.
inflation.
Yeah, and oh yeah, don't want any of that. I'm going to take a look at a couple of trades that I've shown you over the course of the last few weeks. I've taken some time off, but I did show a Starbucks trade where I was doing a diagonal spread, and there we were buying the August $95 puts that span earnings, and we were selling the July $90 puts that expire Friday. It's been a nice trade. Right? I think we did that for a 475 debit. Right now it's trading at about $5.40. The stock hasn't gone anywhere, but it is drifting lower. That's been nice. I showed you a CRWV bullish put spread down to the 115, 120 strike price. And that's also doing well with a few days left until expiration. Uh, let's see what else. Adobe was a short that I highlighted about a week ago. That's been a nice short. PA or PENN. That was a short I highlighted in Sunday's video. That's actually done pretty well. Harry, what have you had? Can you recall anything that you've had from the last event we did?
I don't recall. I remember I did not like Lulu. I was
Yep.
pretty anti Lulu. Um, and this wasn't from the event. I got burned here on a Reddit long. Reddit looked great. Everything on the chart looked great. I'm still in the long. They don't expire for a while. But obviously, some news broke about a lawsuit on Reddit, and I should have followed my son. My son went long Roblox, and you see what Roblox has done this morning, up
Crazy.
$6. Um,
Yeah.
so he did well on that trade. But my Reddit long right now, hopefully it'll recover, but don't hold out much hope for it. I'm still short snow. I don't like snow. Um, the technicals on snow tell me to be short. I remain short Apple below the SMAs, and let's see. I am short MSTR at the moment. By the way, had a nice pop today. I bought back the short puts. I have the long puts, but MSTR can move pretty quickly. So um, that's where I am. I'm waiting on a couple of trades to turn around. Oh, and I'm long JMIA. That's just a longer term trade that I have on. I have 8,000 shares. It's a $4 stock. There's rumors of a buyout. It's less of a technical trade, more of a, if obviously that buyout comes out, then that could pay off very nicely, and there's not much downside to that $4 stock. JMIA is not really going below four, so limited downside, good upside. I like JMIA. I still like JMIA as a longer term hold.
I had a long on coin earlier today and it was not moving. And so I set a limit order out to get out just above my entry price. You can see it's basically just been chopping back and forth, even with the market volatility. It hasn't gone anywhere. Ended up making a little bit of money on that. I got long J&J, which I do still like, and that probably will be the long that I feature today. And it
Hmm.
was in here when the stock was starting to recover. And it is a post earnings play. Really nice D1 gap up through major horizontal resistance. And it was able to hold all of those gains when the market was coming in. So I felt that it had a good chance to move higher. I did take gains on it, especially when I started to see this type of chopping back and forth. I just thought, you know what? We're getting ready for the live event. I'm going to get out. Yesterday, I bought a Nvidia call debit spread, and I still like this, and it could actually be another long that I feature today.
Hmm.
So we're going to be sending our chips, the H2O chip to China. NVIDIA is all excited about that. And you can see the gap up from yesterday. ASML came out today and they provided very murky guidance, said that their sales should be up 15% this year, but the market didn't like the news and the lack of guidance. And they had cited tariff concerns, which I found to be interesting because chips are not being tariffed. So,
I wonder if they're a
um,
lithograph machine because they're not really a chip maker, right? They have one
yeah,
product. It's sort of their big machine that costs like a couple of $100 million. I wonder if that's just not covered under the exemption, and because they're not technically a chip. Every chip maker they
right.
have a monopoly. Every chip maker in the world needs their product to make their chips, but they're not a chip maker. So I wonder if that's the issue there.
It could be, and I don't know if they're exempt or not, but certainly I would look into that. Regardless, Nvidia is going to be selling more chips, and I do like that stock. You can see how it's rebounded, even with the market selling off. The stock has
Yep.
been able to come off the low. So I am long the 172.50 lottos that expire Friday. I will be looking to get out of those on any kind of move higher. My net cost on that is about $1.24. So, and I think they're trading about 90 cents now. So I was looking, my thought on that was that the stock pulled back a little bit yesterday. And we had a weak reaction to the CPI. Might as well take a look at the market. Nice big gap up. So we had all the semis gapping up yesterday on this news that we're now going to be selling chips to China again. And the only problem was that the CPI came out at 0.3% versus 0.2%. Actually, 0.3% was expected, but 0.2% is where the recent readings have been. And the market didn't like that news so much. So we had this gap reversal off of a new high. And I do not ever like buying a gap up to a new high. Always a very good chance of a reversal on that. So market started to reverse and then the momentum picked up. And I felt that Nvidia sold off along with this market decline, and that if the market found overnight support, that Nvidia would pop this morning. Well, we didn't get that support. The market continued to drift lower. And so here we are. But the stock is hanging in there. It's more a matter to me of will this trade play out time wise. I didn't give myself a lot of time for that move because I felt that that move was I was really playing an overnight bounce. And I felt if we had gotten one, that Nvidia would participate, and then the ASML news weighed on the stock as well. I knew that going in. I knew ASML was going to be announcing, so I was aware of the risks.
It's interesting on going back to SPY for a second. Um, we've obviously had this incredible run up, right, ever since the lows on April 7th. So much now that this is one of the most overpriced markets since 1999, which is saying something. Um, and if you look, I think, since the beginning of July, July 3rd, let's call it, there's actually been a little bit of reduction in this momentum here, right? I mean, we're starting to see a consolidation, but a consolidation that's actually drifting down. And today we get a break down to the 15 EMA of 618, hits it actually almost pretty much exactly. And we get a break of the ascending trend line on the bottom end of that corridor. So, are we finally seeing some? And you and I talked about this for quite some time. Are we finally starting to see, news aside, everything aside, just some ebbing in that momentum on the market that that could start looking like a potential pullback here could finally be coming.
Well, the news cycle, I think, starts to get pretty heavy in here because the tariffs are going to happen. And right now, the market's willing to discount the fact that, oh, they're going to change, deals will get done. Uh, Taco, Trump always chickens out. I don't think he's going to chicken out. I think these are going to be instituted to large degree. Sure, there could be some last minute negotiations to maybe drop 5 or 10% off of the tariffs, but he stayed pretty close to what was initially proposed. And there's been a lot of foot dragging. And you can imagine that nobody is really excited about this as far as our trading partners. So they're reluctant to get any trade negotiations going. Japan said that it could take 3 or 4 months before they come to terms, and they're not going to be pressured by a deadline. So we've got that. We've got a likely um, Fed statement that's going to stay where we currently are, no change. And then the market, I think, gets worried in August, like it always does, that the Fed may not cut rates in September. And then the other possible speed bump in here is earnings.
Yes,
And earnings have been
earnings.
reduced. The expectations, analysts have cut their expectations for earnings from where they were 3 months ago to where they are now. 9.3% was the expectation for earnings growth on the S&P 500 3 months ago. Now we're down to 5%. So the bar has been lowered. So for all of you traders out there, uh, just because the company beat expectations, realize that the bar has been lowered substantially. So it's
And
not
here's
just the beat that matters.
the real question is, everyone's looking to see tariffs, 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 tariffs. Where are their effects going to show up? Well, they're not yet. If they may never, but they're not yet showing up in the inflation numbers, right? I mean, you got a little bit of a bump in the CPI, but today's PPI number certainly wasn't a hot number at all. The point being, though, is that money has to go somewhere, right? The company is paying a tariff. So whether you're Microsoft or you're Apple or whatever, the fact is if they have a 30% tariff or they're paying that money. Now, either they're swallowing it, in which case that shows up in their earnings, right? That will show up on their gross margins because they're swallowing it, not raising costs, or they're raising costs. Well, it looks like so far the costs aren't really going up. So what obviously people are going to be looking for on these earnings is that money being swallowed by the company, and if so, how's that affecting their margins? This earnings season, which about a half of that quarter is where tariffs took effect. So you have the first half of the quarter where everything is, status quo. But I think they'll be seeing, we'll be looking to see where do those tariff effects show up, because you can't just say we brought in $500 billion and it didn't come from somewhere. It came from somewhere, right? It came from a company, it comes from a consumer, it comes from something. So where is it going to show up on the reports? And this earnings season will either start showing that or it won't. And I think the market's going to be very in tune with that.
Right, and even murky guidance is also not going to go over well for the market. They're not going to like that
No,
uncertainty. So even if companies just say, "Hey, listen, this quarter was in line, but we don't know what to expect for Q3," uh, I think there are going to be some disruptions, supply disruptions, especially in tech with the rare earths. We've already seen it in the auto sector where they've had to stop production on some EVs, and now that the chip deal is done with China, I suspect that we have actually received some rare earth shipments because I
hmm
know that was a caveat. We're not going to be doing anything until those shipments have reached our shores.
I'm sure
So,
not. And then I hear
and
rumors of the reverse carry trade coming back. And, there's so much of this, it actually just reinforces the notion that we always preach, Pete, which is price action, price action, price action, right? Because you can look at it in one lens and say, the end of the world is coming, this market's going to crash. And you look at it another way and you could say, pundits all were wrong, we're going to continue soaring up. And in the end of the day, yeah, it does affect your ability to swing if you have a thesis one way or the other. But price action is king here. And it just kind of reinforces that if you try to interpret the news and anticipate the news, you're going to wind up most likely getting it wrong. But price action doesn't lie. And so that's what we follow.
so we had a good question along those lines. I'm not able to day trade. I can only swing trade. And given that the current market conditions are so choppy, what would you suggest that swing traders do right now? And this is from Matt Kopus. So I've been highlighting in my videos, and actually, Harry, you and I have been highlighting trades that are neutral to slightly bullish, neutral to slightly bearish. One that I've got a question on is AEVA. Hey, Pete, what do you think about AEVA? I'd mentioned I like it. I still like the stock, and I'd mentioned to you that it has such a nice long-term uptrend that where do you jump in? Where do you get in on a stock like this? Well, when the stock was going parabolic like this, I said, I want to join a trend like that. This nice steady price action tells me that buyers are engaged. And so I like selling the $30 puts. Well, the stock's at 26.90 right now. That means you're going to be assigned, you're going to be long stock at 28.40 because those were when the stock was way out of the money. Those were 160 bid at least. I think the spread was 162.20. So you could have worked that spread and gotten filled better. But yes, so I still like the stock. This is your starter position for a longer term trade, period. This is the first leg of the trade. And so, yeah, you're easing in, you're trying to find a decent entry point. This is a nice little dip that the stock's gone through. I still like it. And so, you could, with earnings coming up next month, you could turn right around and sell the $30 calls against the stock and then before expiration, lower your cost even further and hope that you get assigned before that earnings date. But even with earnings, I would still feel comfortable owning this stock. So that's how I would approach it. Starbucks, I had mentioned earlier, that was a diagonal debit spread. That was good. The CRWV, those are all premium selling strategies. JOBY was another stock that I highlighted, selling some out of the money naked puts on. Those are the types of trades as swing traders that you can take advantage of right now, selling that high option implied volatility on stocks that you want to buy. You have to
Yeah,
want
I
to buy
mean,
it because you could get assigned.
I mean, as a swing trader right now, as people are saying, um, it really, it also there's a risk tolerance, right? So there are what's known as very high probability trades. The return is lower, but the probability that the trade will work out is much higher. So a bullish put spread, for example, an out of the money bullish put spread. If you do it right and you make sure your short put is below the two good levels of support, you have a nice bullish stock and a decently bullish or flat market, you're going to come away with around a 90% chance of that trade paying off, right? But your return is not great, right? So you're going to get around a 25% ROI on that. You're going to get 20 cents to the dollar, right? So um, but it is a great way to do passive income. It's a great way to have trades that you really don't have to worry about unless there's a major, almost cataclysmic event that causes the stock to drop and break two levels of support, right? So there you have your high probability, lower return trades. You also have, selling puts, right? But a lot of people um, might not have the option permissions to sell puts, right? But if you do, that is another way of taking some higher probability trades as long as you're willing to sell puts at a good enough delta that your risk level isn't high. Obviously, your highest risk level trades are going to be buying straight calls or straight puts with a very near term expiration. That's going to be your highest risk swing trade. So if you find yourself in a risky swing market, which one could say that we've been in for a while, even though the price action has been pretty consistent, but there's this worry, then take the higher probability trades. Go with those until you feel more comfortable in a market direction. Uh, okay, so someone asked, did they get out of their RCL long swing position that they took on Friday? They exited for a small loss on Tuesday. Should have they stayed or not? And well, I don't know if you had an option on it or if you were stopped, right? Um, if you had an option on it and it was expiring, I guess I understand getting out. The stock hasn't broken any technical layers here. It's still well within its corridor. It's still very bullish D1. Obviously, today it's actually holding up fairly well in the market. So if you were in stock, I'd say you got out too early. If you were in option that expired this Friday, then you probably did the right thing.
There've been a lot of great opportunities on a day trading basis. I mean, there have been stocks every day that have been moving back and forth.
Okay,
So
I kicked
even
the
with
shit out of Tesla yesterday.
you were all over Tesla, and you want to? I'll put the M5 chart up. Do you want to tell us a little bit about how you traded Tesla yesterday?
I mean, it's the gift that keeps on giving. Um, you know, you have a really great look at, if you look at the daily chart right now, you have this convergence of the 200 SMA and the 50 SMA. So right now, I wouldn't touch Tesla. Why? It's right between those two SMAs. There's, if it could reject off that 50, which it might. The 50 is at 322, but then it might, the 200 might hold. And that's pretty close by at 317. So I wouldn't go long here. I certainly wouldn't short it here. But yesterday, you have this clear break below the SMA 200, and it allowed me to short the stock, knowing that I had the SMA 200 as my resistance point, that if it broke above that, I could get out of the short. I was able to short the stock, take profit, but then it kept bouncing back up and testing that SMA. It would test it, fail, come back down again. I'd short it again, bounced, closed it, shorted again. So I was able to keep repeating that same trade of knowing that I had the 200 SMA there to protect me, and knowing that I was going to get these bounces where I could short, go, take profit, short again, take profit, and then not have the risk that if I was holding that short today, I would have been screwed, right? Because I didn't have to swing it. I got $3.50 per share profit, and I'm out. So it was a fun trade.
You also had VWAP, which was above the stock all day. Never did the stock get close to VWAP, which is a sign that there is selling pressure.
Some news just
Yesterday,
broke.
sorry, I was going to say yesterday, I probably had three trades on NBIS, and they were all really nice as well. So I was in and out of that. I had bought it early, took gains, bought it again, took gains, and even here off of VWAP, took about a 40-cent gain out of it. Had really nice relative strength throughout the course of the day, heavy volume. Take a look at that D1. It had pulled back to a VWAP E, and then right in here 2 days ago, it had a big move higher on volume. Let's take a look at that because it's important. When you have massive volume, you can see how heavy the volume was here all day. That is what tells you that buyers are in there aggressively. And today you have RBLX. Look at this volume. That's the tell right there. When you have that, you know that this is a legitimate move and you're stacking green candles. Those are moves that you can join, oblivious to what the market's doing. Sorry, Harry, what were you saying?
No, I just saw just a piece of news that said apparently Trump was on the verge of firing Powell, but U.S. Treasury came in and said that if you look at the legal notion of the word cause, he doesn't have cause. So that gave him, well, pause for the cause. Uh, in terms of firing him, they differed with the White House lawyers who said that he could fire him, and the U.S. Treasury said you'd have a problem if you did. So uh, interesting, probably still ongoing, as I'm sure he'll be searching for a legal cause or reason to do it. Rocket Lab mentioned a couple of times, particularly in comparison to Roblox. They're both great, by the way. Rocket Lab probably, in terms of relative strength, maybe a little stronger, but this stock has taken off. It is constantly making new all-time highs every day. This thing has gone from $25 in June; it's up to 46. So almost a 80% increase in the price. But it just keeps going on pretty decent volume. In fact, the only low volume days are the days where you see a little bit of a pullback, if you want to call those pullbacks. This is one of the stronger stocks out there, and might be my long pick for the week, but I'm looking around. But I like Rocket Lab. I do. It still looks great.
Rocket Lab. What else we got here? I'm taking a look at some of your questions. Lulu entered Lulu pretty early. Yeah, that's been a great short. Stock has been in a big long-term downtrend. And boy, this failed bounce right in here at AVWAP-E. Beautiful stuff right in there. Tries to get above it, just gets smacked right back down.
So this part we have here, and this is something we should talk about with people. Um, a bullish put spread on Meta. They sold the 685. They bought the 680 for 87 cents, expiring July 25th. I like the expiration. It's a week before earnings, and it's not too far off. Great. That part's fine. A couple of problems with this though. One, you really need to get a dollar credit, and there's a statistical reason for that. When you make a dollar on a $5 spread, which is 20 cents, for every 10 cents for every 20 cents, right? Where, sorry, 20 cents for every dollar in the spread. You make your if you do one contract, you'll make $100, and if you falls below your in this case here 680, you'd lose $400, right? So if you look at that trade over, I don't know, 100 times, 80 times you were successful, you would make $8,000 and 20 times you were unsuccessful, you would lose 8,000. You'd lose $400 each time. You'd lose $8,000. So you need to be successful more than 80% of the time with a dollar credit in that spread. Fine, great. Uh, the lower you get, in this case here, you got 87 cents, right? Now you need to be successful roughly 85% of the time. So, in order for that to be profitable, because now you're risking $4.13 on your trade compared to $87 that you'd be getting if it works out. So now you've now raised the bar on how much more likely you need to this trade to work for you to be profitable in the long run for these type of trades. Secondly, you did it at a 685, 680. Now, if you look, the real support here is at 676, which is the 50 SMA. You have one level of support that was also already broken, because if you do a trend line starting on May 1st all the way up, that trend line gets broken on July 11th, right? It breaks below it and stays below it. So now you've already broken support, and now you've done your bullish put spread with a price point above the next level of support. So any test of that support puts your entire bullish put spread in jeopardy. So the date was fine, but you didn't get enough credit, and your strikes were not okay because you were outside of where your support should be. So I would definitely be concerned about that trade. It wasn't well structured.
And if it doesn't line up, you've got to, no matter what else you think about Meta, if those support levels don't line up with the stock, you've got to keep looking for a different stock. It's, you might
Yes.
like Meta a lot, but it just doesn't line up for the strategy. You've got to get closer to those support levels.
Right, and I understand going out to those support levels means you have to go out further in time, which puts you in range of its earnings. In which case, then that's not a good bullish put spread trade to take. And in general, by the way, bullish put spreads are difficult to take during in the heat of earnings season, because there's so many echo effects, right? Where the earnings for Amazon could affect Shopify or whatever. So there's a lot of things that go on with the earnings and the option prices going nuts. Uh, but in that case, you need a dollar on a $5 spread, and you need two good hard levels of support below your short put. You didn't have either.
Had a question on AMAT today. You took a trade on that long red candle right there, and then you had a nice long green candle off of support, almost bullish engulfing candle. You stopped out of the trade, looking for input on the trade. Well, you did the right thing to stop out of it, getting in on this long red candle right in here early in the day. The market was doing nothing. Okay, here's what the market started to do. It just chopping around. It was finding support on yesterday's low. So you didn't have a reason to really jump on a trade early in the day, and taking a position on a long candle like that. Long candles get the trade on our radar, but they're not something that you want to jump on. A long candle, you want to wait at least a bar or two to see what happens. And in this case, you can see that the stock quickly reversed and went right back into it. And let's take a look at the daily chart. You can also see that there really wasn't any kind of big technical breakdown on AMAT. All it had was that it was tied to ASML and that earnings report. But from a technical standpoint, it broke the EMA 8, which is nothing really to hang your hat on. That's a very minor support level. So you needed to see more technical weakness in the stock actually rolling over before you would try a short on a stock like this. And you needed to wait for some type of market direction to give you confirmation.
Second here. Uh, um, Thoughts on bond yields in Japan being carrying the calling line for U.S. Obviously, very different rate strategies, but cutting here seems dangerous. Obviously, it's not a very technical question. But um, I mean, there's a knock-on effect everywhere. You know, Japan's always been a sort of an anchor globally on rates. So if you cut into that in that backdrop, is there a chance that there's a flight from treasuries? Yeah, it could. I think there's a lot of that that go into the decisions on cutting or not cutting. So um, different strategies, but it's the same overall. It's the same global bond market, right? I mean, the bond market is bigger than the equity market by quite a bit. So I think we haven't cut, and as long as Powell's in there, I don't imagine we will cut, which is what the administration's issue is. There's not there, he's not going to cut until we start seeing some stress in the labor market, or some slipping in the U.S. economy, or some real progress on inflation. But yeah, there's a lot of eyes on Japan right now, but I wouldn't let it affect your trading. I wouldn't, be reading into what is Japan doing, and oh, now I should trade, Amazon. No, I mean, look at the price action. That's what's going to matter more than what the hell Japan's doing.
Right, and there are a lot of macro issues. China, Japan, Europe's not in great shape. What if these sanctions get put on to Russia? They're probably teetering on a financial collapse. So there are plenty of problems. And what's the market keep doing? It just keeps floating higher. So you can't short based on the fundamentals. They've definitely impacted my trading in so much as I have not been as aggressive trading this upside, but I've still participated. And I've had almost a market neutral approach where I'll take a long or a short. I don't care as long as I've got all of the other elements. A stock that's breaking below support on heavy volume and has relative weakness for an extended period of time, weeks, months, even. Yeah, I'm going to short that stock. And same thing is true on the long side. If the stock is breaking out to the upside on heavy volume, I'm good trading either side of the market right now on a short-term basis. So that's how I've been approaching it. What gets me bearish? Uh, Follow through selling that easily takes us through AVWAP-Q would be the first thing that I'd be watching for, and I'd like to see us challenge that previous high, which is around the 605 level. I'd like to get there quickly. It has to happen quickly. I don't want a gradual drip with lots of jerky little price action. That tells me it's just a normal little pullback that can find support. So if we get there very quickly, we take out AVWAP-Q and we get to 605 very quickly in a matter of a few days. Okay, that tells me that there's some pretty serious selling pressure starting to come into the market. Those are the types of technicals that I'd be watching for before I would get bearish.
Um, Lulu, someone's asking about Lulu. Um, I entered Lulu early yesterday, but because of PDT, I did not sell it until today. It gapped up in the morning, and the first slight pullback, I sold the option. Was this a justifiable exit? Again, I don't know your expiration. Lulu is still very bearish on the daily chart. It has not technically confirmed that it is no longer bearish despite today's strength. There's not really much volume here on Lulu. The market is flat. Lulu's up a bit. It doesn't take much to push Lulu up in this environment. Um, if your option was expiring this Friday, yeah, probably a decent exit to take that pull back and get out. But if your option was not expiring, then no, I don't. I would stay in the short.
And the biggest problem that option traders have is they don't give themselves enough time. And there's nothing more frustrating, at least to me, probably to you too, Harry, than to be right on the underlying stock, to be right on the market, and to lose money because you didn't give the trade enough time to work out.
Yeah. Um, Again, it all comes back. We talked about this last time we were doing this, which is you need to know what are you considering your level of support and resistance. You know, if it's a day trade, you're probably looking more at the intraday measures, VWAP, and stuff like that. If it's a longer term trade, you're looking at the SMAs. But where do you consider that, and can you handle a move that touches those levels but doesn't confirm above or below them? Because if you can't, then you're going to find yourself exiting trades not for technical reasons, but simply for P&L reasons, right? You're just going to look at something and go, oh, it's down today or it's up today. I want to get out of this trade, and it still hasn't broken any semblance of the support and resistance. In which case, you're not trading support and resistance. And if you're not trading support and resistance, you're not technically trading, because when you break it down, that's all technical traders are, and that's kind of redundant because all traders are technical traders, and that is identifying the price points of support and resistance. So if your trade isn't either positioned or timed to handle those tests of support and resistance, then you're going to be exiting poorly and based off of a P&L, not based off of the chart.
I have someone who's in a cost put credit spread that looked great yesterday and looks like crap today. Should I get out now that it's broken the 200-day moving average? Those are always tough trades. You're a few days away from expiration. Yeah, the stock has been drifting lower, but nothing imminent, and then all of a sudden you get that crack down below the 200-day moving average. So here's how I approach it. First of all, you were leaning on that 200-day moving average. That's a nice support level to have leaned on. I don't know when you put the trade on, but you ideally would want to have more than just one line of support. So perhaps you're leaning on that horizontal support as well. It is a swing trade. And as a swing trade, I evaluate what the stock is doing at the close of business. So today, you could easily get a very nice rally off of this low that gets you back above 960 on Costco. You don't really have assignment risk right now because you're not that far in the money. And those options, even though they're in the money, still carry time premium. When they stop carrying time premium, that's when you risk assignment. So right now, you'd be closing that down for pretty much a max loss. I would wait to see how the day plays out. We've currently got a little bit of a market bounce that's taking place off of the low. So this noise right here is behind you, and we've got a chance for the market to rally back and perhaps even rebound, regaining some of yesterday's losses. And you have the stock has been able to find support. So I'd like to see the stock rally. And with just a little bit of help, you could get back above that 965 level. So I'd wait to see. If it clears 960, that's kind of your first hurdle. If it closes above it, you can breathe a little bit easier, but you'd like to see a nice market rally. You'd like to see it continue and start getting back some of yesterday's losses.
I'm not going to be
Legging
as
it.
nice as Pete is here. What the hell were you thinking? I mean, oh my God. Look at the cost. Unless you put that trade on like June 9th, at what point did you look at the cost daily chart and go, oh, it just broke the 50 and the 100? I think it's a good time to put on a credit spread, because clearly this stock isn't breaking other levels of support. Did you put it on when it fell below the 100 again for the third time on June 26th, or when it was unable to get back above the 100 SMA at any time from June 26th all the way up to July 9th? Every time it tried, it got rejected down. Here you have a stock that has fallen quite violently, fallen below the 50, fallen below the 100, staying below the 100, unable to break above the 100, trapped between the 100 and the 200, been breaking support all over the damn map, unable to break resistance every time it tried. And you thought, hey, I'm going to put on a put credit spread where it's 4-1 against on my payout, and use the 200 SMA as my level of support because this stock has been so great about holding support over the last month and a half. Are you soft in the head? Don't do that trade.
Here's your clue right here. See this red line below zero? It's been weak relative to the market ever since that pretty much earnings announcement. So it's been gradually drifting lower. That's not the type of support that you can lean on.
See, Pete's much nicer. Yes, I'm planning on holding gold. Can't go wrong holding gold. And gold's going to be fine. It's coming back up. No problem with gold. Gold actually has been doing great. I'm golden boy, pony boy. Good.
Let's see what else we got going here.
Lots of wonderful questions. PGR has been a good short for me. I might go in again now that the earnings are out. What the hell? Let's see, PGR. Oh yeah, why don't you go again now the earnings are out, considering it's up $3.50 today. That's a great idea. It's clearly formed some support here at around 240, and yeah, let's relatively strong today. It's above VWAP. It's above up about 1.5% of the day. Yeah, go back in, go short it again.
Let's see, I had a short that I was going to highlight today. I like Target short. So on the long side, I still like Nvidia. Obviously, they're going to be selling more chips now that they're open back up to selling chips to China. I think that'll be good news for it. I know it doesn't announce earnings for a good long time, and I wouldn't be out there gaga buying it like mad. But if it starts to improve today and the market also gets back into its previous range from earlier today, and it can start chewing away at some of yesterday's losses, only then would I consider it. Um, Target. I like this little double top in here where the stock pulls back below the 100-day, forms that lower high, and then now is breaching a declining 100-day moving average, which tells you that the stock has been in a long-term downtrend. So I like Target on the short side here. I'd want to see it finish below that 100-day moving average today, but I think that's going to set up to be a nice short. And you can see, what did Target do when the market bounced this morning? Nada. Stayed on its low. Sell, 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 sell. There are sellers here. So that's a short that I'm going to show you. And again, I'm day trading. I'm keeping my trade duration very short term. That's a short I'd be looking to short bounces on, though.
RCI long, I like it. It's good. Just watch out for that low volume. Obviously, it's been on quite a run. But when you have stock, any stock that doesn't have at least a million, a volume of 1 million shares traded a day, you have a risk of some volatility in there. But obviously, it's a very strong stock. Doesn't show any sign of letting up anytime soon. So I like RCI long there.
I did have a question earlier that was good. We had been talking about AEVA, and the approach there, and someone said, "Oh, I wouldn't touch that stock. The fundamentals, icky." Well, guess what? Amazon, you wouldn't have touched that stock 15, 20 years ago because it had icky fundamentals. You would not be in JOBY, you would not be in RBLX, you wouldn't be in half the stocks we've mentioned today. High growth companies are going to have astronomical PE ratios. And so you're going to really severely limit yourself if you're looking, oh no, it's got to have a PE of between 15 and 20 for me to do, a strategy. We're short-term traders, so we look at the technicals, and the technicals tell us when buyers are aggressive, when there's a sense of urgency. And so that's really what we're leaning on, and we're using a short-term perspective. Fundamental analysis, if your time horizon is 3 months or more, then you have to start incorporating some fundamental analysis because now you're spanning an earnings announcement and they become fundamentals actually become relevant. But on a short term basis, where your trades are 2 days to 2 weeks to 3, 4 weeks, the fundamentals don't really come into play that much. You're really trading that momentum.
In fact, the more you go down the fundamental rabbit hole, the worse off you're going to be. You want to do fundamental long-term investing, just follow the Buffett rule. That's actually the best fundamental rule that's out there, which is, hey, buy good companies after they bounce off their 200 SMA. That's it. You know, Apple bounce off 200 SMA, buy it. Amazon, buy it. You know, Nvidia, just buy Coca-Cola, Walmart, all good companies, all solid companies. No vaporware there. Just buy good companies. Don't buy speculative. Just buy good companies bouncing off the 200 SMA. You'll be fine. That fundamental rule, that Buffett rule, has probably been the better long-term investing rule than anything else out there. But it's not what we do, right? I mean, because you could have a company that is completely full of shit and basically in a warehouse with an empty desk and two chairs, and it could continue going up until whenever. You're blaming price action, right? So you're the idea that the fundamentals are going to catch up with this company's price on this day, on the day that I'm trading it, all will be revealed. No, no, just follow the price action. If you don't like the company's fundamentals, fine, don't hold it for the next year or two, but it doesn't mean anything in terms of trading it over the next day or two. Your ability to read fundamentals, trust me, is not going to do any better than that Buffett rule.
RGTI, you've got nice profits today. Nicely done. That is a very strong looking stock. And the supercomputer, AI stocks, quantum computing have been really hot. And this one happens to be in favor today. That breakout was really nice right there. It sounds like you got in early on it. So keep riding it. If you see a bearish engulfing candle off of the high of the day, that's when I would get the heck out. Or if you see a nice high of the day that turns into a bearish hammer, I would take profits.
Quantum computing, by the way, is a good example of ignoring fundamentals. So you know that in all these quantum computing companies, not a single quantum computer has been made and sold because it's not there yet, right? It's still down the line. Lockheed, the number one quantum computing company in the world, it's Lockheed Martin. They're the only ones that's actually closest to making a quantum computer that can be sold for industrial use. But you look at the fundamentals of these companies, it's going to be all dead. They're not bringing in revenue yet. That's not what people are trading. That's not what people are investing. That's not what people are trading in. The decide on a podcast yet? Yeah, I believe it's going to be called TradeCraft, and putting it together soon. And then I will, when I launch it, you will all be one of the first to know. Does one option have a place or a symbol that signifies consistently profitable traders? Yeah, they're in red, and the ones that are close are in orange in the chat room.
We've got a lot of traders who are actually up and coming as well. So we may be in a position to start elevating some people too, I believe.
Yeah, I think it's been a while since we've promoted a couple of people, and I think it's time. There's been some great traders in that room. I mean, anyone coming in that room, and just absorbing the knowledge in there. If you come in there just to try to find trades, obviously you can, but you'd be missing out because you can come in there, grab a couple of trades, snipe them, get out. But the knowledge that you could pick up in the room is infinitely more. Blah blah blah. Teach a man to fish. Blah blah blah. But it's there. So, what else? A lot of people like to lurk. Yeah, you fucking lurkers.
Well, they want to get their confidence up before they post oftentimes as well. So I appreciate that.
Well, there's pills for that.
For the people that learn, though, I mean, they stick their neck out and they put a trade up that's not so good. They're going to hear from us, but they're also going to learn from it. They learn and they benefit from that critique.
There's always this problem, which is, and it's something that when I used to be a sociologist a long time ago, way back in my academic days. There's this theory called differential association by a man named Sutherland, and the theory was that one of the problems that these inner city places that undergo crime and all these issues is that anyone who winds up being successful uh, inevitably leaves, right? So what is left there are the people who aren't successful without any role models to look up to. So anyone who, from that area who does well, goes to college, gets a good job, they don't move back to the inner city or where they grew up. They move to a nicer place, right? So what you have is this exporting of people who are doing well, and the people who aren't doing well stay behind. Full circle. That happens a lot in trading rooms like ours, where people who wind up, they spend a year or two learning, doing it, and then they get successful, they're off. Now, we hope people stick around to pass on the knowledge to help us build this base of traders that can make a better life for themselves. But hey, look, a lot of people are just, I learned what I needed to learn. I'm making money now. I'm an independent trader. I'm not going to stick around and spend my time, and certainly spend my time without getting paid for it, helping other traders. Fine, right? But that's what happens in these environments. You get this high turnover rate, and the people who wind up doing well don't stick around to help others. We wish they did, but they don't. So it's an interesting thing. You get a lot of people who would have been or were red traders or are traders, and now they've done well and they're off and doing their own thing.
Let's see. What else? BTI. Did we go over that one? You can see right now Nvidia is doing very nicely here with the market barely getting back to where it started the day. So this is kind of the price action that I was expecting. I've got my alert at yesterday's high just to let me know in case I want to get out of my call position. BTI. And BTI. So that stock actually had really nice run up this morning. That looks pretty good. Volume pretty patchy in there though. Yeah, this has actually got very nice breakout here and follow through. So yeah, this is definitely a nice looking stock in here. I like that breakout.
Hmm. Um, Morse code. I don't even know what that means. Uh, Randy, I'm glad you had your hand slapped a couple of times. Um, Hard to trade and post, in my opinion. Really? Because for 4 straight years, I've posted every single trade I've ever made in real time with the position size. I posted every single exit in real time with the position size, all verifiable through time and sales. I post it to the one option chat room. I post it into Discord. I posted on Twitter. I posted into 3 different spots, all within 20, 30 seconds after I make the trade. And then I generally follow it up with conversation and answer questions at the same time. So that sounds like you problem, Awigwa. I'm not sure. Chew gum, walk, same time. I don't know. Maybe it's me. I don't know. Superhuman here. I can just post and trade. It doesn't seem that hard, though, to do, really. I'd brag if it was, but it's not. It's pretty damn easy.
Let's see.
I obviously need some more coffee today.
I think we're kind of getting to the end of the questions, which is
Yeah, I mean,
okay.
look, it used to be, Pete, that we could sit here and look at this and go, okay, this is what you can expect over the next week, right? Where you could say, um, uh, you can go and thanks for appreciating real day trading, Cow, McKay. But you can go and look at the trend. You can look at the price action, and we're going to be drifting upwards, or we're going to be expect this. Everything now obviously needs to be caveated with news-based intervention aside, right? So just keep in mind that when Pete gives these proclamation of the spy will do this and do that, it's all, obviously we cannot predict what the hell is going to pass over the news at any given second. We could have news in the next 5 minutes that's going to jump SPY to 630, and we could have news in the next 5 minutes that can drop it to 600. So all the interpretation and prognostications are going to be, we can't take that into account. We can only take it on, hey, if there's no news intervening, this is the direction things are headed. So that's sort of how you have to uh, kind of take all that into account.
I have a question on DUOL. I mean, this stock is definitely weak. You can see the relative weakness right in here is right on the 200-day moving average. Do you short instantly on that 200-day moving average breakdown? That actually would be a good question because the way that I like to break a moving average down is I like the stock being fairly close to it. And then that long red candle, I mean, it obliterates it. Well, that's not happening right now. It's kind of poking at it. And what oftentimes will happen, especially after a decent round of selling like this, is you'll get a long green candle off of it that support. There's some short covering coming in. So that's why you need that nice, crisp, big breakdown and follow through. Then you can short that. And I'll show you this as an example. Nice long red candles here. Okay, let's get short. So you short it right here, and then the stock flies back right in your face here. All right, that type same type of price action could happen here, but once you break it again and now you can't get through it, this is where you could have a decent short in here. But in here, just on this breakdown, if you're short the stock, you can stick with it. You just want to make sure that that 200-day moving average now becomes resistance and that you don't bounce off of it.
Uh, CRM, love it. Great short. Don't second guess yourself, Sam. It's a good short. Go for it. I really like it. Now it's even rejecting off VWAP. It's a good short right now to enter. So uh, you should do that. I like that as a beginner trader. What should be done rather than entering at the high or low of the day for long short vibe? You are like, hey, before I play professional baseball, what should I do in terms of like picking out a glove? I don't fucking know. I mean, you have so much to do before you even get to that question. And obviously, the short answer is don't enter at the high a day on a long and don't short at the low a day on a short because by definition you're going to get screwed. They're low a day and high of day. But in order to do that, you have to know how to read price action and you have to know how to trade. So, what you should be doing is following the 10 steps in the wiki, which means that you should be paper trading right now. And you should be setting the benchmarks for yourself and not touching a dime of real money until you've passed those benchmarks.
So while you are paper trading, and for those of you who have been trading, you don't FOMO into a trade, especially like say RBLX today. What you want to wait for is you want to wait for some type of pullback. And one of the more sensitive variables that we use is an HA reversal. So there's your flat top in here. When it's moving, moving, moving higher, you set an HA reversal alert. So it's in a bullish phase right now. Now it goes into a bearish phase. There's your flat bottom green. There would be your entry point right there on RBLX. So you're not chasing, and we've made it very easy. If you use one variable, you right click, create alert, go in, select HA reversal, and select a 5-minute period, bullish, save it. Now, wait a minute, Pete, it's bullish, but it's already bullish. That's right. The servers know it's already bullish. So for this to trigger, it has to go bearish and then bullish. If it were bearish when you set it, then it would just have to go bullish. But you save it and forget it. Now you're basing your trades on alerts, and you take a nice deep breath And if the alert never comes in and the stock just goes to the moon, then you let it go to the moon without you. But if you get that dip, is the dip brief and shallow? Yes, it is. Then you have an opportunity. You could use relative strength and weakness. So if it goes relative, it's relatively strong, it dips relatively weak, and then it goes relatively strong again, you're going to get your alert. That's how you avoid FOMO. You get the alert. Does that mean it's a buy? No, the dip had to be brief and shallow. And if it was, then we know it was just a normal round of profit taking, and that'll provide you with an excellent entry point. And also, the time that it took for that alert to trigger is also going to give you time to evaluate what the market has been doing.
Um, Oracle, yeah, it's a good long. I like it. But didn't it just have earnings or earnings coming up or something? But yeah, it looks great. Uh, GK, I wish I could tell you that you're right and it's very data centric, but in terms of how we pick who the red traders are going to be and the orange traders, the truth is, one, we're way behind on it, as we said, in terms of promoting people. And two, I wish we have to be better about tracking the trades that people post and who's actually doing better. Because to be honest, it's kind of fucked up. It's really Pete and I. Hey, this guy's been doing really well. Let's take a look and look back and say, oh yeah, they've been they've been doing well. And then we look back on that person and take a look at the trades because those get logged and see, yeah, they've been very successful over the past 6 months. Maybe it's time to start thinking about promoting them. We do need to have a lot more rigor on that. So I agree. But because the data is there, truth though is also the problem is a lot of times when I post, right, I'll say I'm going long the 200 using the 200 call at $5.60 a contract, 10 contracts. Oh, no one else is supposed to position size. I do it so people can verify. But let's say 200 trade call at 560 a call expiring this date, and then here's the exit, right? So you can look at it and say, okay, this is how much profit he made off of that trade. It was a profitable trade. This most traders posting in the room, even though we say, hey, please be this, they'll just say long, Nvidia using the 250 call, but they won't put a price there or an expiration date. So it becomes kind of hard to look at it and go, uh, uh, this person was more successful or not successful. But yeah, no, look, there's a way to do it. We just have to do it. Right now, it's too much of Pete and I going, yeah, I like this person looks fucking good. Let's promote them. People who are there deserve to be able to look at someone and go, this person's trade is worth more than this person's trade because they're proven successful. I'm not saying the people who are in there that it's wrong, but it can be more precise. And we're striving for it to be more precise, starting with asking traders to please be more specific when they post.
Yeah, we get a pretty good feel over time, and we also know from other members. And what happens is that as members start to gain reputation, you'll see them post a trade, and then you'll get 5 or 6 or 10 thumbs up on the trade. And we all give each other thumbs up on trades too that we like and that make sense.
And if it doesn't make sense, let's just say you generally will hear
Look
from
out.
me in the room about why it doesn't make sense. But hopefully, it's a learning system. There is a system that logs the trades in the chat room, Kyle. It logs every trade. You can even look and you can look up by person all the trades they made. It's all right there on the side, and you could search back and see. So the data is all there. It's the specificity that might be missing in a lot of cases. But certainly you'll know. Oh, Dave went long Nvidia, or this person went short. Whatever, and you can look at it and get a general sense that was a good trade. But the more specific the trade is, the easier it will be. So, thank you. Good question.
My
Oh, and I hope you do become a member, GK.
my
Okay.
172.50 calls are at my break even, which is 124 right now. So I'm pretty happy on that for Nvidia. Let's hope that the market continues to push higher and the stock along with it. You can see it's got nice relative strength in here. So it should. I mean, that was good news for the company yesterday. So I like Nvidia. That's going to be my pick today on the long side, and my pick on the short side is going to be TGT. And Harry, what did you decide for your long today?
Well, I like the short of CRM. I really like CRM short is good. And for my long of the day, um, I don't know if I'm gonna do a long of the day right now on this. I might
No.
just, I think everyone, I mean, my recommendation is if you are looking for a long-term JMIA. But I do like Rocket Lab, RKLB.
Okay.
I'll go with RKLB as my long and CRM as my short.
And yes, Rocket Lab. We looked at that one earlier. Um, there's a RBLX HA bullish reversal. Okay, the one that I just set. So getting that alert now. But
That was
yes,
my son's pick
RKLB.
yesterday.
That's yeah. Well, I'm glad he's making some money.
He is.
He-
It's a summer job.
all right. Oh, that's really cool. Oh, that's awesome to hear. I tried to get my kids interested, and it was a no go, and so I wasn't going to force it down their throat because my dad was a concert violinist, and he made me play the violin, and I hated it. So I'm not going to
Yeah,
do
you
that
can't
to
force
my
them.
kids. No. All right,
But
everyone.
all right, and I
Uh,
guess a lot's going to happen, I'm sure, over the next week. But we will be here. I will be talking about it. So tune in.
Lots of earnings releases, and it probably will be 2 or 3 weeks before we do another live event. I'm going to try and take a little time off, but yeah, a lot of news between now and the end of July. Mega cap tech earnings. We have monetary policy, FOMC data points coming out. What happens in the next 2 weeks, I believe, is going to drive the market for August and September. So this is a good time to keep your risk exposure fairly light. Let's see how all this news plays out.
And I
Thanks
will be
for
on X in next Wednesday, so you can listen to the spaces there, and I will hopefully have um, the podcast out as soon as possible.
Thanks, everybody. Trade well. We'll see you
All right.
soon.